Hi guys, in this talk that you're going to be watching, I was invited to Usiu to come and share some of the lessons that you've been learning while you've been building the business, about Forex trading, about what Financial Hub does. And the talk is basically a presentation that I did for the students, and when you watch it, hope you learn something. So, peace. So first of all, I'll give a brief introduction on how I landed where I am. Then I'll give a brief history of what Financial Hub is and what we do. Then I'll give you a few challenges of the industry we are in, and then I'll distinguish finally the differences between running a company and being in school. First of all, I'm very, very grateful to be here. So it's not often that we get opportunities to come and share with people, especially schools, about what we're doing. Often what happens is people look for us, or different people gather up and they just invite us to certain conferences like churches or chamas where people have money and they're looking to invest. And so we actually guide them on some of the things that we do and how they can go about them. So personally, I cleared high school in 2014. So I'm sure most of you cleared around the same time or 2 or 3 years later. And when I did that, obviously the first thing that you do is to look for a campus to join. So I got good grades and I was called to do mechanical engineering at TUK. And I enrolled in TUK, Technical University of Kenya. So I was there for a semester, and then I realized this was not really what I wanted to do. So I left in 2015, and in 2016 I joined KU to do electrical engineering. Now when I was doing electrical engineering, that's where everything that I'm currently doing started. So I left TUK, joined KU in 2016 September, and was there again for just a semester before leaving again. So while I was in KU, just like you guys interact with each other, I'm sure you have friends from different schools like business. I'm not sure all the schools you guys have, but you have different friends, the people you live with also. And so we were just chatting and talking about some of the things that you can do to make money while you're in school. So there was writing, there was things like transcribing, and we decided, let's do something different. And one of the guys was doing actuarial science. So one of the guys we started what we are doing with was doing actuarial science, and he told us there's this new thing called Forex trading. And people who are doing it currently in this country, we don't have many people who are doing it. But if you look over the internet, there are people in South Africa, there are people in other countries like the US who have been doing it for a long time, and it's quite lucrative. And so we decided to visit the library and just get a book to just read about Forex trading. So we read one book, cleared the book, and we thought we knew everything, just like every other person who goes into an industry. So we decided, since we've read one book and we know what you're doing, let's put in some real money. So if you understand how Forex trading is you deposit real money to a broker, a Forex broker, it's called a brokerage, and then you start trading. And trading it's quite simple. The basic idea about trading is you're trying to speculate where a particular market will go. So I was trying to open the trading view, but I don't know the problem. I think my passwords or something. So the basic idea you do is to try and speculate where a particular market is going. For example, we trade markets like gold, we trade markets like oil, we trade markets like Bitcoin, we trade markets like Euro USD. And on the Forex market, a pair is traded against the other one. So it's a relative game. There is the dollar against the shilling, the euro against the dollar, the pound against the dollar. So we have different markets, and your main job is to understand whether a market is going up or it's going down. If it's going up, we try and make money by speculating, by buying the asset. We think that the asset will appreciate in value, and so we buy it. If we think that the asset will go down, it will lose value, we sell it. And so our main job is to make money by either buying or selling. And anyone here, whether you know nothing or you know a little bit about trading or you know too much, at the beginning, at the point of entry, everyone has a 50% chance of making money. Why? Because you can only do two things. You can only buy or sell. And the market can only do two things. It can either go up or down. So without any knowledge, you can have some luck and make some money. And that luck was with us. So we deposited about 30,000 shillings, 3 people, and we started trading. After a period of about 3 or 4 weeks, we had about 120,000. And for us, that was the moment where we realized we think this is an easy game. We don't really understand why we've been working so hard. We should be looking for easier things to do, and we can make easy money. So we thought we knew everything, and we decided let's first take some time and do it. But after 2 weeks, we had lost everything again. So we lost every single penny that we had. And it was at that point again that we realized there's much more to the game than what we had learned. So we had to come back and think hard about whether we really knew what we were doing. So what we decided is to first, at that time, you guys never faced such things because obviously you're in a private university. In the public universities, there's these lecturer strikes where the lecturers decide for 3 months you guys are not going to learn anything. And so we had such a phase in about January 2017, February. And during that phase, we went deep onto trading because we didn't have classes, there was nothing to do. So you just had to read trading. And the more we read, the more we realized that this was a whole different field. It was something that is coming to be a very, very big wave. And thinking along those lines, we decided to call off school because we thought if we still remained in school, because like for me, I was in first year, the other guys we were with that was in second year, and we thought if we stay in school for another 5 years, there was a very, very high chance that the wave would pass us and we wouldn't be able to catch up with the guys who would go full-time on it at that point. So we decided to leave school and focus on trading full-time, just learning how to trade and devoting our energy and time into understanding how markets work. So how do you do that when you have no one to go to? Like we tried going to people, and all the people we went to never knew really what trading was about. We thought people who had done economics would have an idea on how we would go about it. But turns out the practical side of trading versus the theoretical side of economics is quite different. The workings of the market are very, very different from what many people think or many people assume it is. The assumptions you have about some subjects are quite wrong. Some things you have to learn them practically. And so we realized even the guys we were going to didn't have much knowledge on what we were doing. So the best option was for us to rely on the internet. Fortunately, we had the internet. So there were very many talks like this which have been recorded for schools like Stanford, for schools like Harvard, where traders would go back and they'd give speeches on books they had read, which had impacted their investing philosophies. Some of the others they thought who are very, very articulate at explaining what it really takes to succeed as a trader. And for us, it was just a process of researching and gathering up information. When you start making money, the friends or the people around you will come to you. They'll tell you, listen, show me what you're doing or try and explain to me how I can do this also. I also need to make some few coins here and there. And that marked the beginning of Financial Hub. So Financial Hub is a company that is focused on training, mentoring, and funding Forex traders. So we also fund Forex traders. So how do we go about the training? The training is we have two training programs. So we have an online course which you can just take at your own pace. You just take it and can slot in an hour or two for doing it. There are video lectures which are compiled like this. So video lectures, there are book recommendations, there are articles, there are tests that we take you through for you to be able to understand how to navigate the market. So we also have a book. That's why I came with the book. It's called A Template for Understanding the Forex Market. We actually also sell the book, so you can also start your journey with the book. I'll give the copies around to be passing. Actually, you can be checking them out as I'm just talking. I'll give one to the lecturer. And so that now brought us into Financial Hub. So Financial Hub now we have trained over 150 students. So for the first 2 years we were working from the house. We didn't have an office. We were just a team of 3 people. And over the years now, over the last 2 or 3 years, we've grown now to over 10 people. So we have over 10 people. We've trained over 150 students, both on the online and offline platforms. We also have a podcast called The Traders Show, where we just talk about entrepreneurship, business, investing, startups, especially for young people, because we felt like if today I was to travel to a different country or a different continent, I'm sure I'd meet more young people doing startups or devoting their time into working on startups. But in our country, unfortunately, most people are not really pushing along that side. So we thought there was a gap that needed to be filled by people trying to do something else. Like if more people would go into things like trading, things like programming, starting their own startups and trying to solve some of the problems we have. Because I feel like I think a business is basically built on value, solving a certain problem. For us, the only reason Financial Hub has worked up to now is because there was a real need for people learning how to trade. So many people will first hear about trading, they'll watch a video or two on YouTube, and then they'll think they know how to trade. And they'll start trading, they lose money, and it's at that point that they realize they need some help. So once they realize they need some help, they look for people like us. And we're very, very helpful, and we're very, very glad to be also of help to some of these people. So what do I really think about the Forex industry? Because the Forex industry has evolved quite a bit. So when we started back in 2016, there were no regulations, there were no brokers in Kenya, and there was no one managing public money. But now all of those things have been ticked. So we now have an influx of brokers. We don't have 1, 2, 3. We have about 8 Forex brokers in Kenya. We have regulations which came in 2017, late 2017, early 2018. Around December there, we had some regulations coming in to regulate the market. And now we've also gotten at least 2 money managers. So basically a money manager is someone who I can come and pull money from you guys. If I'm licensed to do that, I can pull money from you guys. I can trade that cash, and then the profits that I get, you guys will take 65% of the profits, and I'll take 35% of the profits plus a management. So I think in the long run, more and more people will come back to investing in the stock market, because what has really happened is, for the first time in history, you can trade the American stock market while you're still here. You can trade the Chinese markets while you're still here. You can trade the European markets while you're still here. So you don't really have to rely on the Kenyan market, which is quite slow. The Kenyan stock market is quite slow. Doesn't move as many percentages as the American markets or the Chinese markets or the European markets. Those markets really have some huge moves. For example, like Bitcoin, I'm sure most of you know Bitcoin. Bitcoin moved from about 5,000 in 2020 to trade as high as $60,000 in less than 2 years. If you got that move, you can trust me, you'd make a lot of money. If you look at a market like oil moved from as low as 0 when Corona came back, when Corona hit the world. So when COVID came, many things went into, there was nothing that was really happening in many economies. And markets like oil really lost value. So a market like oil went down to as low as 0. It traded even at negative at some point. But right now, 2 years later, oil is trading as high as $90 a barrel. And that's why even oil prices and fuel prices are high even in this country. It's not only a function of the government or the policies of this government, it's also a function of the global economy and how it's really working. And that's why even oil prices in this nation now are too high again. So those are some of the things that we really invest our time trying to understand. But there are some challenges in the industry also. I wouldn't say that there are no challenges in the industry. Obviously, with anything new, there's some risks and challenges. Part of the challenges is one, there's a very big gap between the people who want to invest and are knowledgeable about it and the people who are claiming to invest for people. So there are very many people who have lost their money to scams. A scam is basically someone purporting to multiply your money maybe 100% every single week. So you give me 1,000, then next week I'll have 2,000, the following week I'll have 4,000. Those things are not really practical. And those are some of the things we're trying to tell people to avoid. Anytime you see someone trying to tell you, give me your money, I'll put it in Bitcoin, and within a few weeks or few days, you'll get huge percentage returns, just flee with your money. Trading is also a practical investment, just like any other one. As much as there's a high prospect of return, I think it's relative to what other asset classes generally return. For example, if you look at real estate returns about 10 to 15% on an annual basis. Most people who are in real estate, that's the rate. But if you look at the stock market, it's very easy to clock between 40 to 60% if you're very good at what you're doing and with the volumes that you have. Some years, like for the last 2 years, even 100% return, because we've gotten very huge moves. For example, like the oil that I'm talking about, the Bitcoin. But those things are not really always there. So when things really go back to normal, when the booms are over and we just go back to a normal economic and market environment, then the normal rate of return that we normally get is about 40 to 60%. But that is a good, exceptional return on an annual basis if you can be able to do that compounded and in the long run. So in this country of ours right now, we feel like in Africa actually we are pioneers. If you look at the African market in terms of these things, it's only Kenya where things are regulated. In Nigeria, they're still not worked on the regulations. In South Africa, regulations are still not there. So this is, in this country, we are very, very, we're very, very good at spotting opportunities and running with them. And I feel like that is what most of us now should be doing. So the gospel that you're trying to preach is Forex trading is something that is lucrative. It's something that can be done, but it's something that requires a process, some time, and you need to learn about it for you to be able to do it. So that's what I'd say about the industry in general. They avoid just the risks that are contained. The people who are trying to scam people, Ponzi schemes, like someone will tell you, I'll teach you in a day. If you come to me, I'll tell you it will take you 2 to 3 years to really understand how to navigate the market. Because there's a lot that you need to understand. So it will take you quite some time. It's just like you guys are in school. I'm sure when you enrolled in this school, you never expected to learn everything that was in this course in a year or two. You knew it had to take some time. So it's the same with the markets, what you're doing. It will take you some time, even when you come to us, even when you're doing it with any other person. Another thing that I'd say now is when you go now into business, I feel like there are very many fallacies that I personally had, or beliefs that I had before I joined business and after I joined business, which have been converted or twisted. For example, I really like joking a lot with Irene and telling her that many people really complain about how they have certain ideas which they didn't pursue, or I had this idea, maybe I should do it, or you kill the idea even before you start it. You just kill the business in the idea stage. You don't really even try and execute it. I think really what really matters in the business world is the execution of the idea. Many of the ideas that us guys have, another person has. So if you look around, you'll discover that some of the things that are really happening around you, you'd really even thought of them. Like you'd think about something, and then 3-4 years later, you'll see someone doing it, and you'd wonder, kwani mse alifikiria kama mimi? Not really. The basic idea is what really matters in business is execution. So what I'd encourage any one of you who's interested in pursuing business, first of all, is don't kill your business or the idea that you have at the idea stage. At least try and execute it. And fortunately now, with the internet, you don't really need a lot of money to execute a business, but you need a lot of money to grow a business. Those things are different. To launch a business right now, if you launch a business, if I can sell to 3 of you, maybe I can sell to 30 of you, maybe I can sell to 300, maybe I can sell to 3,000, 30,000. That's how I think about it. So the first thing that you really have to examine is the people who are around you. When we started, we were just selling to the people who are around us. Those are our customers. Those are the people who would go spreading our gospel. There are these people who are trying to do this, and they're doing it like this. This is their website. You can check it out here and here. So I think that is one of the things that many people don't really understand. So I often hear people kill an idea. It will need a lot of money before I start, or this and this will be needed before I start, so I can't do it because of this. That's not really good. If you had given up, you can trust me. And at the point of starting, we never knew this thing will take the direction it has taken. But if you had given up at that point, you wouldn't really have moved further. And then you need to just have one beginning point. When you started out, you didn't have a podcast, you didn't have a book, we didn't have partnerships. Now we've grown to, we have a book, we have partnerships, we have the podcast, we have students, we are trading even for some few individuals in some markets. And those things wouldn't have happened if we never had one beginning point, which was just sharing what we had. And for us, we started with a YouTube channel. We actually never started with anything much than a YouTube channel. So we had a YouTube channel and a blog, that's it. And we'll just write the blog, and people would ask us, when are you releasing the course? When are you releasing this? And that will tell us, now go and work on this product. The next thing we had an idea of is a podcast. And the podcast came about as when you just have normal discussions with people, and you thought, what if we record these conversations that we have and we share them on YouTube? And fortunately, it turns out people were interested in the conversations that we were having. And that's how what we have been doing has evolved to what is currently the business that you're running. The next thing that I think I'd say is running a business is quite different from really what many people think. Because if you imagine, many people when they hear someone is a CEO or someone is running a big business, the normal analogy that comes, or the normal thinking that normally accompanies that is, this guy must be rich, he must be living a very good life, he must be living in these decent places. But once you start doing it, what you see is the responsibility that this person has. When you're running a business, you'll be called by a client anytime wanting something. You'll be called by your employees anytime wanting a certain thing. You'll be called by your investors a certain time requesting for a report on certain things. You'll be called by your partners. So it's really the responsibility that we should be looking at when you're thinking about going into business. If you go into business, there's a high chance you'll have a huge responsibility. And someone actually joked that at some point you may not really be running the company, but the company may be running you. So it may really be directing the course of what you do on a day-to-day basis. Because you'll find that some of the things that you'd love to do, you wouldn't be able to do them because you're just focused on running the business. My final point would be the most important thing in business is learning. You guys have come for classes, as we also went for classes. But the most important thing after you leave this is, if you're going into business, is learning. At different stages, the business requires different skill sets. When you're starting out, it's looking for a customer. When the customers are 20, it's learning how you'll scale that business and manage your partners. When you're starting out, your biggest struggle is you don't have customers. When the customers come in, the biggest struggle is how will you satisfy all these customers. When you're starting out, you don't have the problem of hiring. When you start growing, you start facing the problem of hiring. So at each point, you must always be on toes with learning. Always be on toes with learning what is required at a different stage. The idea that you can learn everything about a business by just being somewhere or without really consistently and constantly working through it is not really something that is solid. So I think you really need to come back to the idea that learning is the most essential skill set. And I feel like that is what you guys are being trained to do while you're here. So with that said, I think I'll just open it up to questions if you guys have any questions about what I do.
You had mentioned about regulations in Kenya.
Yeah.
For the forex market.
Yeah.
Being ticked off. Are they indicated in the book?
In our book?
Yeah.
No.
How much are your books?
We sell the book for 1,500, but I'll sell it to you for 1,000 today.
Can we, let's say if we're not interested, or me, if
Yeah.
I'm not interested in trading,
Yeah.
does your company offer those services?
We are working on that. So yes, because we are still working on finalizing a few things before we start out, and no, because you've not yet started out. But sooner or later, I think what you'll just do is leave me your contact, and once you're open to that, I'll tell you.
So currently you're trading for yourself?
Yeah, currently we are trading for ourselves. We've just kept it for ourselves. When we were starting, we realized there were very many people who are getting involved with people's money. And when you're getting involved with people's money, you have to understand two things. One, money is too emotional, and often what people will tell you when they're giving you the money is not what they'll tell you when they want their money back. So when they come to give you the money, they'll really plead with you to take their money because of the returns you're promising. But when the business fluctuates, because when you're trading will fluctuate. Today I may be up 10%, tomorrow I'm down 5%, the next day I'm up 10%. So you really have to have some limits on how you do some things. For example, there's a lock-up period. If you give your money to a money manager, there's a lock-up period. You're not able to remove your money from the money management scheme at least till 6 months are over. The reason for that is, one, for you to avoid the fluctuations as the client, and two, for the money manager to have a long-term horizon to think about the objective of the investment. Because once you're investing, there are clear objectives. So those are the main reasons why we decided to at least shy away from taking public money until we had everything sorted out before we jumped into certain things. Yep.
When you're beginning your business in your company, as you're leaving school,
Yeah.
How did your parents take that?
Okay.
How are you able to cope up with it? How did you know that this is what I want to do, this is what I'm focusing on?
Okay.
And the second question is, where do you, how are you going to expand your business in the next 2 to 3 years maybe? Or where do you see yourself?
I have a good answer and a bad answer to that. The bad answer to that is when I was leaving school, I had the idea that I have the idea that if you're trying to leave school to do a business and you're convinced that it's a risk you're taking, you're not sure if it will work out, there are many things which could go wrong, but you still have that drive that tells you, try your luck. Just take the chance. I feel like if your parents stop you, you are not really serious about pursuing the opportunity. That's one. There'll be a lot of friction. That's something that should be expected. Obviously, your parents will be very happy if you clear school because the best for them is for you to fit into the system, for you to be secure, not really to take some risks. So there'll be that friction, and you should be able to expect it. So when that friction comes, I don't think it should really stop you, because I've not met anyone who's tried dropping out and was backed up by their parents and patted on the back for making such a decision. I think a big part of what really happens is these people are just basically rebellious. The parent comes to a point where they have to accept that this person just has to pursue a certain opportunity. And the good answer to that is, if you understand generational lags, there are certain things that you can see that your parents would never be able to see. And a big part of startups is being able to see opportunities where others don't see opportunities. So a startup is basically a company which grows faster. You realize an opportunity and you grow before people notice that there's an opportunity there. And if you're going to do that, then you must be comfortable with the idea of being wrong, first of all, because you could see an opportunity where none exists. And the second thing is you must be able to pursue it as much as the people around you may think you're wrong. So I feel like the right way to think about it is, once many people think an idea won't work, those are some of the best ideas. When people try and tell you, this one won't really move in this direction, I think that's when you should really try your hand at it. Because if it works, there's a high chance you'll get a good reward. So that's how personally I handled it. The first one, it was an intuition, like it was just more of a feeling, a gut feel of this is what I should be doing, and not this other side. But now after thinking about it from a point of reflection, I realized that you can only see some opportunities where others don't see them. And once that's the case, obviously the people around you are likely to tell you to back off or not really move into them. And once that's the case, then you miss out on the really big idea that you're pursuing.
I also as well have two questions. The first one would be, does your company offer a sort of algorithm that promises the 40% to 60% return?
Okay.
So a sort of way to do things, or it just rough ideas put together in a book?
Mm-hmm.
And then the second question is, you talked about having 150 clients, right?
Mm-hmm.
So how do you picture yourself growing? Because that's constant revenue, right? But at some point it will stop. So how do you picture yourself growing? How do you get the funds to grow the company?
Okay. So for the first question, the set of algorithms, I think, I'm not sure really but let me. In trading, there's the algorithmic side of trading. There's the algorithms. There are people who use machine learning, artificial intelligence to make decisions in the market. But when you're trading, there's no set of guarantee. Whatever method you use, whether it's algorithms, whether it's discretionary trading, which basically involves making decisions using your mind, your acumen, your intuition, how you've learned how to trade, whether it's economic models, there are people who use models which model how the economy is likely to perform and how things are likely to turn out, and then they use that to bet on asset prices. There's nothing that guarantees you a certain return. But there's always the objective that you're aiming to. And that's why we said you can fluctuate. The market conditions keep on changing. For example, if you look at a market like, let's say, the Bitcoin market, there's a time Bitcoin will move from 5,000 to 60,000, and there's a whole year where it will do basically nothing. It will just move between 5,000 and 15,000. So the whole year to just be moving in a ranging market. There won't be much that is really happening in that market. When that is the case, it's very hard to match the return that you'd make when that market is really moving very fast and when that market is fluctuating. So I think the thing that is really important is every fund has an objective, what they really try to promise. But not every year they'll be able to meet that objective, right? And the second question, I think I actually forgot your question. The second question matches what he or she was asking. First of all, there's a very big market. We think this is just the beginning of the Forex revolution. We don't think this is the end, we think this is the beginning. First of all, there's a very big market in this country. We have not gone to, if you go into towns like Nakuru, the other day we were in Nyeri, if you go to places like Kisumu, Eldoret, Mombasa, all these places, there's no one really that is out there trying to show people the right way on how to do it. But the opportunities are already reaching out to these people because of the internet. So one, there's a very big market already in the local market around here. And the second market is the East African market. So we have Rwanda, we get clients even from Zimbabwe. We have some people from Zimbabwe, Rwanda, Uganda, Tanzania. We actually have some people coming from Tanzania to visit us. So there's a very big market geographically that you can approach. And how do you approach that? I think if you have the right business idea, if you have the right number of users, if you have the right plan on how to execute that business, I don't think you'll miss one or two rich people who are willing to back you up, or other venture capitalists who are willing to give you the money for you to pursue the ideas that you're working on. As long as you have something that is solid, something that can convince people that your idea is good and your business is good.
So now, what's the mindset that you have when you lose money?
That's a very good question.
Yeah.
Okay, so when we lost the 120,000, obviously you have to go back into hustling. Like you have to find a way to make some money, because no one really believes in, first of all, what you're doing. And the minute no one believes, no one is willing to risk their money on you. So what you have to do is to look for some few coins here and there. And once you have, the idea that we had is if we can get 50, 60,000 and prove to someone that we can be able to do this, then we can get more and more and more and more. And that's what we basically did. Through that determination, we were able to get some few dollars again. So we had about, again, another $1,000. And when we started doing things again, things started now making sense. And when things start making sense, to some point, you find someone who's willing to back you up. And it's at that point that we started finding at least one or two people who are willing to put in at least some good money for us to be able to grow and move from where we were to where we currently are. When you come into trading, there are basically three things that you need to understand. One is the system development. So the system development, what you're basically talking about is how will you make decisions on a particular market. For example, like for me, I've specialized in trading 5 markets. I look at gold, I look at oil, I look at 2 currency pairs, so Euro, Yen, and GBP USD, and I look at another market called the US 30, which are 30 of the best American companies. Right? So I have a system that I use to make decisions on whether to buy or to sell a particular market. If I had access to the internet, I'd show you, not to the internet, that platform, I'd show you around how you make decisions around that. That's the first thing. The second thing that you need is a risk management framework. So when we started out, what we didn't really have is a risk management framework. There's some risk in the market, and if you eliminate risk, you obviously eliminate return. So you really have to take some risk when you're trading in the market, and that's what we do. But we have to take calculated risks. You have to know, if I have $100,000 and I'm going to speculate with it in the market, how am I going to speculate with an objective of probably returning 10%, but not losing more than 5% of the money I have, right? So there are those clear objectives that you have. And then there's the third framework which you need, which is the psychological framework. So if you come for one of our programs, we train you to think very differently about losses from how someone who's just starting out will think about it, how to handle your emotions. Because it's not easy when you have, let's say, 10 million and you lose 100,000 in a day. Not many people can be able to process that in their minds. But you can be able now to train yourself. There's some very good psychological literature which has been written out, which can help traders learn how to manage their minds, learn how to manage that uncertainty, that risk that comes with not knowing whether today you'll make money or lose money, and also euphoria that comes with making a lot of money. Like you were saying, if you make a lot of money, There's that excitement that comes, that high that comes when you make a lot of money. So how do you regulate all those things? And you really have to come back to psychology, really understanding some of those tips that are there for you to be able to regulate your emotions, avoid biases, avoid that euphoria, and avoid many things interfering with your decision making in the markets.
What brokerage account do you use?
I use Paperstone. Paperstone.
What makes your course different from the ones that are being offered by these brokerage platforms and other trading platforms? What makes someone go for the course rather than just create an account on one brokerage and then they'll get a course from there?
Very good question. Again, one thing you need to understand is if you're learning how to trade, the best person to go to learn how to trade is a practitioner. So most brokerage firms don't actually trade. Most brokerage firms just introduce you to what forex trading really is all about. But if you want really to understand how to trade, if you want really to understand the tips and tricks on how to go about the market, you need to find someone who's putting their own skin in the game, like someone who's devoting also their money, someone who's taking some risk with you, because that person really understands what it takes to make money in the market, what it takes to lose money in the market, and what you really need for you to be able to succeed in the game. So I think that is one of the most important things that we bring to the table that many people don't really have. Many people who claim to teach people how to trade, most of them don't really take part in the market. They don't really trade in the market. And the second thing is that for us, we have not really focused on the basic knowledge that is written out about trading. For us, we teach you how we trade. If you come to our classes, I don't teach you what a basic thing is. If you want to learn some of those basic things, we have a lot of free material. We have a free ebook. We have a YouTube channel where we take people through this free stuff. And you can just go to those platforms and check out the free stuff. So if you come to our course, you go directly into the deep stuff, like how you're going to go about your trading, how your day should be structured if you're going to be taking some risk, why you need to focus on some specific markets. So we'll go into the nitty-gritties rather than just a blanket of what it really takes to succeed.
You need to develop patience.
Yeah.
And you need to adapt.
Yeah.
You also need to be like you don't need to have emotions.
Yeah.
Because there's I have not seen this in these many guys who are coming to the market like they want to trade, but emotions, they are being affected by emotions.
Yeah.
Like losing money when you press a trade.
Yeah.
Like, it doesn't go directly your ways. Sometimes the market can go against you for some time and push us to your way.
Yeah.
So I would like to know what kind of strategies do you use like to trade in a market, and how did you manage to avoid these things? Because at first, when I was doing forex, and I've been a forex for 5 years, and the very thing that really affected me, like the thing that was I couldn't take control of, was emotions. I remember the first time I traded, I lost around $1,200 for the first time.
Okay.
Because of emotions, like I tend to hold much losses like than profits. You
Okay.
understand?
Okay.
So
Okay.
how did you manage to fight all these barriers in the forex market?
First things first. I think the main reason why many people become emotional, one, is they're not really competent at doing it. So often what happens is when you start out, I can't tell you that you'll avoid being emotional. When you start out, there's a very high chance actually you'll lose money. That's the basic process of learning how to trade. You need to lose some money for you to make some money. You need to go through that process of losing. But how did I handle it? One is going through it. Like once you lose your first account, you lose your second account, you understand why you're losing. And if it's an emotion that is interfering with your decision making, there are simple rules that you can come up with to ensure that the emotion does not interfere with your decision making. One clear, simple rule that I personally use is the minute I'm in a trade, I lose objectivity around the market, right? The minute you've done your analysis and you've decided, I'm going to buy a particular asset. Once you're in, your mind only works to show you why a particular market should work to your direction. And if it's going to the opposite direction, then the thing that really affects you is you're really thinking about how you're going to lose money. So one is I have a framework which I use, and one of the rules is if the market is, I'm in a market, I don't interfere with the trade. You get? So once I've executed a trade, I don't decide, okay, if it's moving like this, I'll do this, or if it's moving like this, I do this. No. Once I enter a trade, I know I'm risking $1,000 on this particular trade. If this trade works out to my favor, I'm likely to make $2,500. If this trade doesn't work to my favor, I'm likely to lose money. And this is the point where I'm likely to get out if I'm wrong on this market. The second thing is you must trade at a level where you're comfortable, right? The reason many people lose money in the markets is because they're trading at a level where they're not comfortable. For example, if you have $1,000, I'll tell you, you can only take $10 per trade risk, right? You can't take more than $10 per trade on a risk. And that means if you have 100,000, you can only use 1,000 shillings for trading on one particular trade. And if you're good at what you're doing, if you lose your first one, your second one, but on the third and fourth one you make money, I'm assuming, and I'm not assuming, that is how you should actually do it. Your risk to reward should always be, you'll make more if you win, and you'll lose less if you lose, right? There is that framework. I'm sure you know it if you've been trading. So you really need to focus on understanding whether your risk-reward ratios are intact, understanding your hit rate. How many times are you even wrong? If you are to be placing trades, out of 10 times, how many are you right, how many are you wrong? And you can be able to know if I'm right, let's say 5 times, and I'm wrong 5 times, and each time I'm right, I make two times what I'm likely to lose when I'm wrong, then in the long run, we'll make money. You get? So you can have simple rules that will help you avoid being emotional. Another very critical one is journaling. After some time, you are able to develop that level of self-awareness where you can be able to notice yourself going into some emotional states, and you can be able to stop yourself from trading. So if you feel like because if you have like 4 or 5 losses in a row, you could lose some big money. And what we normally advise people, or what basically happens is, when you go through that phase, the best thing for you to do is to step outside the market, take some time, increase that reaction time of the emotion, and then you can come back to the market after things have cooled down. You get? So it's just emerging in a lot of psychological literature. There's no other secret for you to master your mind. And that's one of the most challenging things for people who want to trade.
Just bots that
Okay.
I think predict the markets.
Mhm.
So are they always right? That's
No.
one question. Or they're not right?
They're not always right. You said always. Always is the key word.
Okay, yeah.
they're
They're
not
not
always
always right. And also when you're doing it on your own, you cannot be always right.
That's true.
So
How do
why-
you make money?
Why then learn if you can use the bots?
That's a very good question. Bots don't really work if you have not designed the bot. You get? If you learn to design the bot, and you design the bot to suit your circumstances, to suit your preferences, to suit your trading style, that's very, very different from buying a bot from someone, right? If you buy a bot from someone, you'll need to tweak and adjust the bot. For example, there's something called volatility. And volatility is how much a certain market fluctuates. So when it changes, there are times where, for example, when COVID came, markets were so volatile, meaning there was a lot of panic in the market. During those times, you must change how you trade. You must evolve and adjust on how you make decisions in the market. If you are using a bot, the one who designed the bot will not update you when he's changing it. So you may find your bot made a lot of money in a certain market and then lost all that money in another market. You get? That's why we normally advise people not to go that direction. The second thing is that most bots which are designed to trade are designed to trade and capitalize on second to second, minute to minute movements. It's a very, very short-term horizon when you're making decisions using a bot. Most bots which are designed by Kenyans can't beat the bots which are designed by Americans, because the Americans there are using physicists who have been into very good schools like Harvard, and it's very hard for your bot to beat that guy who's on the other side of the world. You get? So I don't feel personally, I've not met anyone who's very good at creating bots or really understands machine learning and artificial intelligence to the point of being able to conquer the market. I think that's one of the main reasons why I discourage people from going into them. So I think I'll stop there. Thanks a lot for having me around, even for the few questions that you guys have asked. I'll hang around a bit if you have any other question. If you're interested in following us, Financial Hub is the key name. Just write financialhubfx.com on any platform. I'm sure you'll find us on YouTube, on Facebook, on the website, on every platform. Which other platform exists? I don't know.
When you see universities developing a mission statement, a vision, core values, they are thought out by a lot of people. Remember, one of the core values of USIU is lifelong learning. Okay? You fail to continue learning, you become irrelevant. You make yourself irrelevant. You can start a wonderful business, but if you are not learning from your experiences, from your customers and competition, you become irrelevant. You work yourself out of the business and therefore self-employment. Thank you again, Ken. Okay?
Yeah.
Let's something.
Karibu.
And please continue sharing and giving your time to younger people. It does help. This is the only way to change things on this continent. Yeah? Sharing and encouraging each other.
You'll find us on every other platform. And if you're interested in knowing about cryptos, if you're interested in asking about Forex, if you're interested in understanding the stock market, feel free to reach out to us. If you're in the position to answer you, we'll share with you the answers. So thanks a lot, and hope I'll see you around.